Bitcoin is going to be dead by 2040.
Quantum's going to break Bitcoin and has been debunked. When I spot bullshit, I go at them and agitate until we find out what it is. They were aggrandizing SBF and saying that he was like the JP Morgan of crypto because I knew he was lying. I just didn't know about what.
Today we are talking with Cory Klippsten, the founder and CEO of Swan. Cory, are you ready to get stacked?
I'm ready to get stacked.
Cory is a pioneer in the Bitcoin education space and known for calling BS early, spotting scams, and teaching people how to approach Bitcoin with clarity instead of hype. Before Swan, Cory worked at places like Google, McKinsey, Microsoft, and Morgan Stanley. He earned his MBA at University of Chicago and has backed 50 plus early stage companies as an angel investor.
I did about 15 years across those companies in summer of 2013 to go full-time kind of Silicon Valley tech ecosystem, angel investing, advising, things like that. Halfway through that, I got just smacked upside the head by the Bitcoin virus. I got it in 2017.
The headline I keep seeing everywhere is that Bitcoin is going to be dead by 2040 because of AI. Can we talk about that? If you've ever been curious about Bitcoin, but you don't want to get embarrassed, rugged, or overwhelmed, this episode is your clean, beginner-friendly playbook. Welcome to Stacked, the show that helps you become your own best asset. Because in case you missed it, you're allowed to have a high vibe and a high net worth. Today, we are talking with Cory Klippsten, the founder and CEO of Swan, a wealth platform focused on Bitcoin as a long-term investment strategy for leaders of families and businesses. Swan has purchased $4.5 billion worth of Bitcoin. Cory is a pioneer in the Bitcoin education space and known for calling BS early, spotting scams, and teaching people how to approach Bitcoin with clarity instead of hype. Before Swan, Cory worked at places like Google, McKinsey, Microsoft, and Morgan Stanley. He earned his MBA at University of Chicago and has backed 50 plus early stage companies as an angel investor. He grew up in Seattle, spent years in New York, Chicago, and now lives in LA with his wife and daughters. So if you've ever been curious about Bitcoin, but you don't want to get embarrassed, rugged, or overwhelmed, this episode is your clean, beginner-friendly playbook. Cory, are you ready to get stacked?
Ready to get stacked. I'm ready to help your whole crew get stacked. So let's do this, Emily.
Let's do it. All right. So I like to start kind of at the beginning. For somebody meeting you for the first time at a dinner party, how would you describe yourself and what you do?
Oh my gosh, I only answer questions. I'm not big on the soliloquies. You got to pull it out of me. I'm a little guarded in that way. Look, I think I'm a serious person, but I very much like to help and like to make things understandable. I had my earliest career, even before the companies that you mentioned, was journalism, which I started, at age 13 and all through high school, and editor of the best paper in the state. And I went off to Mizzou for broadcast journalist. That's my undergrad is broadcast. So I really enjoy trying to take complex topics and boil them down to simple sound bites, the 10-second version, the 30-second, the 90-second, the 3-minute, the 5-minute, the 10-minute. You just have to have different versions of whatever the point it is that you're trying to help people understand. And I think in this space in Bitcoin, because that's what we're here to talk about, I think the most important thing is just getting people started. Yes. They have to want to learn more, or it's just never going to take. And so it's more about just getting that spark lit.
So that was actually one of my questions for you was, I think not a lot of people would expect or know that you started actually in media and journalism. And I think it's really interesting that you've woven so much education content into Swan. But before we dive into that, for those who aren't familiar with Swan, what exactly does the company do?
Yeah, so I like to describe it as the wealth platform for real Bitcoin. And those words are very carefully chosen. It is a platform. So we are a fintech, like a financial technology company, and we build a lot of tech, and it's mostly engineers doing a lot of coding and things like that. It is really focused on long-term wealth building. So that's why we often talk about, as you did in the preamble, the leaders of families and businesses. We want people that are taking their leadership role seriously and are doing this, for themselves and their future, and their kids, their companies, things like that. We're really built to serve principals, not agents. So we like to serve people that are making their own decisions. We only serve the decision maker, not some committee, not some, CFO, CIO that rolls up to some huge company. They can go to Wall Street for that. But we are your Bitcoin team. We are your Bitcoin wingman, Swan with the wings and all. So I think that's pretty cool. We have wing women too, by the way, Brickle Babes. So yeah, I think that's the way to think about us. I think is we're your Bitcoin team that helps you understand it, helps you put Bitcoin into any product or wrapper that you need, whether it's retirement accounts, just buying, selling. We have Swan Generations where you can gift it to the next generation, tax loss harvesting, various tax. I mean, it's the intersection of rich folk and Bitcoin creates a lot of opportunities in the tax area. Yeah. So we do a lot of that, helping people optimize with products.
When Swan calls itself the real Bitcoin company, what does that mean?
Oh, so that part is the second half, which is real Bitcoin. That means real Bitcoin, not paper Bitcoin. So that means Bitcoin that you can actually see on chain, that you can take self-custody of. You don't have to, and that's something that I think some people get hung up on. So the point is owning the real Bitcoin. I think as you get into Bitcoin, your desire to take self-custody will increase significantly as you come to understand the asset, and kind of a big part of the point of it is being outside the system where you don't have to ask for permission to use your own money. So that is kind of one of the key core value props alongside number go up, alongside the historically increasing purchasing power of Bitcoin. I think the fact that you can actually custody it yourself is fantastic, but you can also, when you're getting started, just have it in an account with a custodian, using a company like Swan.
So you had a very respectable resume prior to shifting into the Bitcoin space. What was your first signal in Bitcoin?
Yeah, so interesting. So I left big companies. I did about 15 years across those companies that you were mentioning before. And I left the last one, Google, in summer of 2013 to go full-time kind of Silicon Valley tech ecosystem, angel investing, advising, things like that. So I did that full-time for 7 years. From summer of 13 until April of 2020 was when I finally gave up my last sort of active advisory role. And, halfway through that, I got just smacked upside the head by the Bitcoin virus, I guess they say. You go down the rabbit hole and start doing, we call it hashtag 40HPW, 40 hours of podcasts a week, just trying to catch up, catch up with everything you missed. I got in 2017, so I didn't have nearly as much to catch up on as people do today because there weren't very many Bitcoin podcasts. Right. But, it was great. It was exciting. I got up to speed. I think it's easier to get up to speed now because there's more and better information than there was 9 years ago. But it took me about 11 months, I'd say. I first of all, you get into Bitcoin at the time that you deserve, and everybody tends to have swings and misses. I think it's usually people estimate about 5% of people actually get Bitcoin the first time they hear about it. The other 95% touch it and hear about it, buy it, get out, don't quite get it. So I had swings and misses in like 2013, 2014, 2015, before finally actually taking the time to try to understand it. And then it took 11 months because there was so much noise around all the crapto ICOs and tokens and everything back in 2017. And all of that noise was really loud in Silicon Valley circles in my personal and professional network. And unfortunately, a lot of the most reputable venture capital firms basically became pump and dump shops for like 5 or 6 years. And they spent $100 billion trying to market a better Bitcoin and failed miserably. And that's been the story of crypto since 2017, which is finally washed out the last couple of years, thankfully. But yeah, all that noise was hard to sift through. And again, it took me 11 months till April of 2018 was when I realized, oh wait, one of these is not like the others. It's not a bunch of cryptos. It's Bitcoin And over there, there's
else.
crypto,
Yeah.
right? Crypto, blockchain, DeFi, NFT, whatever. It's just its own little scambling finance thing.
And then what was kind of the moment where you realized, okay, like this, obviously like this Bitcoin stuff is real. It's not going anywhere. What kind of propelled you to make the jump to actually set up a company?
Yeah. So I was definitely by fall of 2018, I knew I wanted to work in Bitcoin, and I was trying to figure out what to do. And first was linking up with a former Guggenheim PM who was really big into Bitcoin. And so we were working on like a closed-end fund that actually got it over the finish line, and he was tight with folks at the SEC, and we knew it was going to get approved. And I realized as we were coming to the finish line of setting that up, that if I was going to keep working on it, you would be selling to institutional portfolio managers on Wall Street. And I have 2 young kids, and I don't like to travel other than, for very important special things, like podcasts in Miami. But no, for real, I tend to try to stay home as much as possible and be very selective about when I travel. And I didn't want to be beating the street doing, institutional sales. Yeah. And it's not exciting or fun getting some PM off zero for somebody else's money. Like that's not, you don't get that sense that you're really helping somebody or changing somebody's life. It's not rewarding. And so I realized, oh my gosh, after 20 some years, essentially working mostly enterprise, almost all my customers historically across consulting and Google, and even most of the startups, probably 70 or 80% of them were probably enterprise focused. I didn't do much consumer. I was like, oh my God, I have to like build a tech platform and serve the end consumer and do like internet marketing and media and all that stuff. Once I realized that media would be the way that I would do the marketing, I got more comfortable because I thought that we could do a good job with that. But yeah, that was it. I had the idea for an education focused on-ramp, basically like a brokerage. I think I had the idea first in March of 2019 and basically tested it with enough people to take the plunge and started the company in June. And then the product actually launched in March of 2020. And then I finally gave up my last active advisory role in April of 2020.
Did you ever think that media was going to come back into your life at that point in time?
I mean, so it's not media. Like we do call it Swan Media just because it's fun to give the team a name or whatever. But, in business building terms and startup terms, it's really content-led acquisition. And so I think it's much more about putting out good research and good content, some entertaining, some educational, and some like pretty deep as well with numbers and research. And that's what builds trust, especially with a high net worth audience. If you provide signal in a sea of BS and all this noise, it's not perfectly correlated, as we all know from experience, but there's some correlation between intelligence and ability to recognize signal and having money. It's definitely not perfect, but there's some, and it's enough to build a business around.
Yeah. And I mean, I think too, like going back to the early days of the broader cryptocurrency space and then Bitcoin kind of coming out as the leader, and this is still, I would say, even an issue today, there's no formal way to get an education on the space. So it's really up to the leaders, the companies, the influencers in the cryptocurrency Bitcoin space to put out the educational resources until the rest of the world kind of catches up and there is more formal education out there. So I think it's when you can create, like you said, signal or just creating resources out there so people can educate themselves, whether or not they do business with you, you're still creating value, which adds value to the company in the longer term and the broader scheme of things.
Yeah. And that, as is often the case, the people that have something awful to sell you are the ones that spend the most on marketing. And so, most of these certificate programs and blockchain programs are funded by the altcoin scammers, whether it's at Wharton or MIT or, a lot of different places, Berkeley blockchain. On the Bitcoin side, there's not any money for it because you can't print the tokens out of thin air and market them and sell them and take 100% of the profit, right? Like when the Trumps create Trump coin and Justin Sun and CZ buy it to try to buy themselves pardons, like all that money goes 100% to the Trumps. Right. Bitcoin's not like that. Nobody creates the Bitcoin and sells it and can take the money. It's not like Ripple. It's not like Ethereum. Like it's issued according to the Bitcoin mining issuance schedule, right? So all you really have at the university level is a handful of Bitcoin maniac professors that do it through their own effort. So it's basically like Korok Ray at Texas A&M, Nick Bhatia at USC, Aurelian Portuese at GW in DC. That's basically it. I don't know of any others. Oh, and there's a guy at Reed, Troy Cross, up in Portland. So there's like 4 profs that are just nutballs.
One course, right? And that's a question I get from my community. Miami being, this Bitcoin crypto capital of the world or emerging in tech, as well as women are, and even men in the community are interested in getting into the space or pivoting career-wise, and they don't even know how to get started from an education perspective.
I remember that sort of branding attempt back in 21 was that
when they had the Bitcoin conference here.
Yeah, they had the Bitcoin conference here, and this was supposed to be the crypto capital, and a bunch of people moved down here during COVID. But I don't think it actually happened, though, right? There's no Bitcoiners here. There's sailors here.
Yeah.
Rob Breedlove moved here and has a studio here. But
some of the mining companies are here.
Yeah.
Hut 8, Mara is up in Fort Lauderdale.
Their headquarters is here?
Yeah, Fort Lauderdale. Mara's Fort Lauderdale. Hut 8 is now in Brickell.
Well, that's cool. I didn't know that. A lot of marathon people were out here. They used to be mostly Orange County, but I guess.
Yeah, it's slowly starting to trickle. It takes a long time to relocate giant offices of people.
Yeah, for sure. Well, mining doesn't need much.
No.
It's mostly just a data center thing, but yeah.
What do you think Bitcoin's biggest challenge is right now with kind of mass adoption? I know they say like almost 1% of the world's population, kind of where we were at with the internet in 1999, of 1% of people are, familiar with and adopting Bitcoin. What do you think its biggest challenge is right now? Is it technical, narrative, something else?
It's interesting. Well, so first I'll say, I think where we are, I think the launch of the Bitcoin ETFs in January of 2024 was basically the Netscape moment. So that mapped to 1993 in internet terms. So I would say we're probably in like 95 right now.
You're putting us back at 95.
That's where I think we actually are in Bitcoin terms. Yeah. That's about right. And that kind of maps. I mean, I think you had, it's, if you think about the development of the internet, it's probably kind of similar. 17 years before 93. Let's see. Yeah, we're 17 years into Bitcoin. 17 years before 95 would have been 78. So it's like Homebrew Computer Club and, probably the first few internet nodes outside of ARPANET. Yeah.
The dial-up connection.
Well, dial-up is still, late 80s, early 90s at best. You wouldn't even know. I did grow up with the dial-up, and nobody could call the house.
I had AIM. We would wait for that telephone to call.
Yeah. It was
rush home after school to chat each other.
After seeing each other all day. Yeah.
After seeing.
Yeah. Well, it was cool. You could chat with people from other schools. I remember that was just eye-opening and pretty neat. So look, I think Bitcoin is an institutional asset now, and this is its first few years being an institutional asset. And I think people are waking up to the fact that it's in all these institutional portfolios. But for most of the institutional buyers, it's the asset that they understand the least.
Right.
and it's the first to go when they need to sell something. And that's what we've seen. And I think that was part of the muted bull market in the fall that I think should have had more legs and should have gone quite a bit higher than 126K. It just was kind of chopped at the knees because of the profile of the people that now own a lot of Bitcoin. And it's people that are just, making a bet, not something, they don't have conviction. They don't have long-term conviction in it. Mm-hmm. They have a lot of money, and it's something that they sometimes choose to own, but they'll rotate out of it, just as quickly as they would rotate out of a stock or a bond or something like that. And that hasn't historically been the profile of a lot of Bitcoin buyers. A lot of people just buy and hold forever.
How reflexive are ETF flows in your view? Do you think flows drive price, or price drives the flows?
Well, demand drives price against a fixed supply. So I think the demand shows up regardless of whether it's going into spot, meaning like real Bitcoin, or ETFs are basically a proxy for real Bitcoin. It's not paper Bitcoin in the way that cash settled futures are. So there is some demand that's siphoned off in the near term to these cash settled markets, which means that really is paper Bitcoin, where there's just people betting basically on both sides of a trade. The ETF demand is real demand because they actually have to buy the physical or buy the spot Bitcoin to back all of the ETF shares. So I think the biggest change and the biggest disruption has been just how much leverage people can put into the market via the options. There's very deep, very liquid and options markets on IBIT in particular. Mm-hmm. And you can really lever up like crazy on that. And so it's become something that people like to really speculate in size. And it can be lucrative to essentially, it's probably legal, but you can manipulate the hell out of the market. And I think that's what happened in late January into early February was, a trader or a couple of traders probably clipped a few $1 billion for themselves by, spurring and getting other people to sort of copy the trade and drive the price down. And they were short and they kind of got it moving. And, that was basically a really well executed trade strategy. That was, I think, a 30% drop in 10 days or something.
Yeah. So overall, it sounds like your opinion is that the Bitcoin ETFs are positive for the Bitcoin community.
For Bitcoin price, for sure. I think there's plenty of debate about centralizing supply and how much power aggregates when a few companies have so much of the supply, because they can certainly influence the development roadmap. And, you could see a contentious hard fork someday, things like that. So it is creating risk because of the centralization of a lot of the supply. But that risk is not existential. It just might be annoying someday. And we'll see. Yeah. We'll see.
So when I first got into the space, my story is that my Instagram account got hacked in like 2018 or 2019. And the only way I was going to get it back was to send somebody $500 worth of Bitcoin. So I had to rush to, God forbid my Instagram account was taken. So I rushed to set up a Coinbase account, send somebody $500 worth of Bitcoin. And my dad and brothers had been really into the space for a number of years. And so I'd been hearing about it, but I didn't really actually get back into it until 2020. But I got into Bitcoin and Ethereum. And then once it later came out about Ethereum and, there's somebody that runs Ethereum, he's making decisions. It can be a finite amount of Ethereum today, and it can be an unlimited supply of Ethereum tomorrow. That's when I had my big wake up call. But you almost have to go through those experiences yourself to understand it.
Yeah, that's true.
I want to jump back to Swan, because we always talk about building businesses and whatnot here. It's something we like to talk about. Was there ever a moment where doing the Bitcoin right thing for Swan wasn't necessarily something that led to, it was a harder path? It meant slower growth, less revenue, or saying no? Does that come up?
All the time.
Yeah.
It's inevitable. If you decide to do a Bitcoin only business, you are by definition giving up lots of revenue. The model for everybody in the crypto space that also has Bitcoin on their list of assets is generally to get people to churn through as many trades as possible. This is why you see Coinbase getting into prediction markets, and they're doing gold futures, and they're basically just a casino. They're trying to get people to turn over as many trades and as many assets as possible, and that's what their marketing is all about. That's what their metrics internally are for. It's all about trying to get you to trade as much as possible. And it's true of most of these companies that, like even you take a company like an iTrust, which has Bitcoin IRAs and crypto IRAs, but all their money is basically made off of like a very small number of their customers that are churning trades all the time. They're just trying to encourage those people to just trade all the time in their IRA account. And, Swan is very different. We are, obviously built the business in the early days on brokerage, but so much of it now is recurring revenue products where people are doing, 4 or 5 different flavors of custody or Swan generations or, other things that we offer. So I think it's probably the only way to survive long term, as I think thousands and thousands of businesses will sell Bitcoin over time. Every bank account, every financial services firm, every brokerage, everybody will just have Bitcoin for sale. So that can't be the thing that's not your mode. Your mode is, again, being this wealth platform that provides all of the products and services around Bitcoin and helps you put Bitcoin in different structures and different products, different custody solutions, and help people save Bitcoin and invest in Bitcoin for the long term. But yeah, I mean, one of our operating principles is always do the best thing for Bitcoin and Bitcoiners. I mean, the addition would be like to the nearest degree that you can tell what that is. And that ends up being actually how we operate. And it gets into how you run a remote company. Like there's very few of us in Los Angeles. If there's 6 or 7 of us there, we probably have more people in Chicago than LA. I think we do. And we probably have more people in Austin than Chicago, and I don't see these people much, once a year or something. And what we do is we try to push decisions to the edges as much as possible. And we use that principle of always do the best thing for Bitcoin and Bitcoiners as the way to keep the decisions decentralized. Okay. So it's basically, if you can figure out what that is, just do it. If it's unclear, talk to a peer.
Yeah.
If you guys can't figure it out, talk to a manager. If it's still gray and unclear what the best thing for Bitcoin and Bitcoiners is, eventually it'll make it up and I might have to make a ruling or something like that.
Right.
But it's extremely rare.
Right.
It's very rare that I have to make a decision for anything that bubbles up from the rest of the company.
Because that's your source of truth. Is this the right thing for Bitcoin? And Bitcoin is that source of truth is for the flow of money and currency and
yeah. I mean, look, not that I'm sure that leading by tweeting is always the best way, but I'm pretty vocal on social media, and I tweet a lot and I post a lot on the team Slack, and I do a lot of podcasts, and then my media team is clipping the shows that I'm on, which they'll do with this too, and then that goes out. And so, most of the company knows what I'm thinking, and what I'm thinking is usually an amalgamation of what my whole team is thinking anyway, because I'm getting like a little something that Brandon said, and I'm like, oh, I'm going to say that on the podcast, or Brady said this, I'm going to do that. Oh, Kristen said that. Oh, yeah, that was awesome. I'm going to use that analogy. And so it's kind of this hive mind thing that then I often am the one to verbalize, but then that cascades down to everybody. And the result is that all we have to do is say we're meeting on the mountaintop, and we'll see you there. 6 p.m. be there, mountaintop, and everybody has to figure out their own path to get there, but we all know where we're going. Other good analogies are just, some of the famous military leaders or generals or whatever. And, I'm not one of these people that's going to use like war analogies or whatever, but it is interesting that it comes up a lot in the Bitcoin space because both Napoleon and Clausewitz, the best German military thinker of all time, both had the same approach to essentially setting the goal for their generals. And then otherwise the generals had complete autonomy pretty much to go accomplish the goal. And so it was really all about selecting the right talent and installing the right protocol or the right operating system in your overall endeavor, a company in our case. And it just means that you don't have to act hierarchically, and I don't have to keep tabs on everything all the time, because you hire really well and everybody understands the principles. And then you have layered on top of that everyone at the company is a Bitcoiner.
Right.
Only Bitcoin. We only hire Bitcoiners, and we were the first company to do that. Now a lot of companies do it, but when we did, and we actually interviewed for it, and as early as 2020, it was like an interview question, like explain the difference between Bitcoin and crypto. And if you couldn't answer it eloquently and truthfully, like you couldn't have a job at Swan.
Is there any other criteria you look for in people that you're hiring?
I mean, this might be a good segue into talking about AI a little bit, because it's changed a lot. It's changed a lot over the last couple of years. And having a narrow role is completely impossible now. You have to be able to flex at least one, probably two steps in each direction. I think almost every company is basically just getting rid of everything in the middle between engineering and sales. So if you're talking to people, that's valuable. And if you are building, that's valuable. And almost everything in between, unless it's, just a specialized niche function based on what industry you're in, like payments risk or something like that. Otherwise it's gone. Yeah. We've just embedded so much just in pushing everything one direction or the other. So product and engineering and design are all the same thing. Doesn't matter. You might bring, it's helpful to have people with domain expertise and years of experience in each of those things, but now they're actually all doing the same thing.
And then how much are you guys using AI like in the current work environment?
All of it, every day, all the time.
Yeah. And agentic AI?
Lots. Yeah, we got swarms, agents controlling agents. I mean, it is crazy. And it's not just the engineering team. This is our marketing and our emailing and client service, risk. I mean, everything, legal, finance.
How much has it changed in the last 12 months?
We're recording, what day is it? This is the 18th? I don't even know what it is. 18th of February. I think we're like 2 months into we started up the S-curve in a big way for useful AI in non-AI companies. Yeah. So AI people have been excited for a long time. And, I've got a buddy from Chicago who started an AI client service company probably like 2014 or something, so like, there've been people that have been at this for a long time. And, I had a ad tech, media tech company that was doing a lot of machine learning along, this 12, 13 years ago.
It was called machine learning before.
Yeah, it was called first AI. It was big data, then it was machine learning, and then it became AI. But it's just that march of processing power and capability up the curve. But I really feel like we just started charging up the vertical part of the S curve for useful AI for normal companies in December. Yeah. I think we're 2 months in.
It feels, I would agree. I feel like last year was all about everybody from the marketing media, the non-techies, using ChatGPT to help with social media posts or, advisory services. It's your consultant or your co-founder. And now it's all about agentic AI and how can you, I'm hearing it from my friend circle all the time is, I can build you an N8N agentic AI. How many agents do you have working for you? It's $200 to create an agent. And your agent can create 10 agents. This is just in the last few weeks. Yeah, it's crazy. Yeah, so that was my realization was, I think, over the holiday, just looking again at kind of my professional and personal network. And it was just, it was the loudest signal coming through since Bitcoin and crypto in Q2 of 17. Yeah. That was for me. Yeah. That was the last time that something was that loud. And,
and prior to that, nothing in my world was that loud since the global financial crisis, which was overlaid with, the app class out of Stanford and kind of the rise of the iPhone. So it was like, that was the big switch over. And, that was, of course, manifested socially by guys in New York couldn't get girls if they were bankers anymore from like 2009 onwards. So they all went into tech instead. And then that completely polluted Silicon Valley. And that's where like all the Wharton guys started going out to SF instead of Wall Street and basically turned Silicon Valley into investment banking, which it basically is now, right? Just like 140 registered reps at Andreessen, and mostly they package deals. They don't source deals anymore. They just, they're basically an iBank. So yeah, it's interesting. I mean, there's more interesting things going on with capital on the West Coast now than there are on the East Coast, which is nuts.
So let's talk about, I feel like the headline I keep seeing everywhere is that Bitcoin is going to be dead by 2040 because of AI, and AI is going to be able to break the code. And can we talk about that?
I just think that, deflationary economics are inevitable because of AI. And that means that you flock toward something that is scarce. We will flock toward real assets. Gold will be increasingly popular. Bitcoin is even better than gold. There's only 21 million. You can't mine anymore. And you can verify that you own it. And when you receive it, you don't have to like check it to see if it's tungsten coated in gold or something, so it's just like, it doesn't lend itself to infinite, rehypothecation. Paper gold has always been the problem with gold, and it always ends the same in war, basically. And now we have something that can avoid that. So I think that is what will eventually happen. But the dominant monetary network of the dollar has very strong network effects, and it includes the entire, military industrial complex and the current kleptocracy that we call a government, and that's across both parties. That's not partisan. But it is a pretty entrenched monetary network, and it will fight kicking and screaming. It's not going to give up easily. And that's not a cabal. It's not a conspiracy. That is actually what a network effect is. It's just easier to make money in and around dollars and using dollars. And the fact that the Fed, basically gives you interest, and then you can dole that out to your buddies, like that pays for a lot of things. And that makes it very hard to combat. And that's why it's going to take a while. And that's why I usually try to get people out of thinking about Bitcoin as a product and more about thinking of it as a technological revolution. So it's not following the adoption curve of an iPad or Facebook. It's much more like steam power or the information revolution, or something much bigger. Usually it's energy related, and I think Bitcoin is kind of energy related. And those take 5 to 8 decades, and we have to pass from a novelty or a collectible through to store of value. We're still early in Bitcoin as a store of value. And then after, a lot of people have Bitcoin as a store of value and don't have anything else to spend, that's when medium of exchange takes off. Not backwards, like a lot of the altcoiners thought, where you try to drive merchant adoption. No, it's like, what do people actually want to hold their value in, and what do they want to spend? It's not what does somebody want to accept. Like the merchant will always take whatever you have as long as it's saleable, as long as they like, if I'm in Istanbul or Alexandria or whatever, and the cruise ship shows up, I'll take your euros, I'll take your yen, anything I can sell, I will take your money, but what do you have to spend? That's what matters, right? And we know this because when we travel, I'm paying in dollars everywhere, and it just automatically translates, and it's up to them what they want to store it in. And it's a fraction of a percentage point for them to translate that into any other currency. The medium of exchange really doesn't matter. And that is a big sort of economic misunderstanding of Nobel laureates and blockchain professors and so many people, so many early Bitcoiners like the Bcash folks and Roger Ver and all this stuff. They just like fundamentally from first principles don't even think it through and understand how stupid that is.
That's very interesting way of thinking about it. I've never thought about it that way. But the way you just explained makes a lot of sense. And for me, another one of like the fundamental aha moments was I made it through Jason Lowery's software. Which
oh, wow.
and I'll be honest, I did not read software. I figured out this was a few years ago, but I turned it into a PDF and I uploaded it to an AI that then read it to me. So it was much more digestible.
Is there not an audible version of it?
There is now, but
there
like,
wasn't
there
then?
was not then. And I had to this was when they had banned the book. So you couldn't get it anywhere. I got my hands on like a PDF copy. And anyway, I think there's some similarities in what you just said that Jason Lowery goes into in his book, in his thesis paper about
the stages of monetary adoption.
The stages of monetary adoption, and then also, Bitcoin as it's a power play basically, and it's not necessarily about buying your steak and shake with Bitcoin. It's about its power projection between different forces, governments, institutions, and it's a fundamental asset.
I mean, I'll be honest with you, I've never been able to get there with the power projection and like the digital power projection. I think that power is generally kinetic. And so I've not been able to make that connection. I do have a beautiful signed hardcover copy from Jason, and I appreciate him. And he's obviously like a very smart, thoughtful, brilliant guy that puts in a lot of work. But I haven't been able to get there. Money is portable power. That actually is true, because you can use it to pay for security and armies and walled condos, whatever you need to. Like it does work in that way. But I don't see a world in which kinetic warfare and just like people punching each other and shooting each other ever goes away.
Yeah.
Because of Bitcoin. Yeah. That'd be nice, but I don't see it.
The way for me that I interpreted it, and this is like, I still consider myself like a normie in the Bitcoin space. Whenever I'm around a bunch of Bitcoiners or at a conference, I feel like I am down here and everyone else's knowledge is up here, which in the grand scheme of things is probably not the case. They probably know a lot.
The good thing is we all feel the same way. Like it's so funny. I just fanboy some of these people that were around before me.
Yeah. But for like the way I explain this to people my normies, my community is, my opinion is, why did the US government even decide to get into the Bitcoin space? Because they need to control the money, because the money controls the power in the world. So and that's how I interpreted Jason's book, not necessarily actually having wars with energy and money and Bitcoin in that sense, but more of controlling the most valuable resource on the planet, which is energy and money.
Yeah, energy is definitely the most important. And then whoever has the power is the one that, at its option can have its currency be the global reserve currency. Mm-hmm. It's not a prereq. You don't have to adopt that, but you can enforce it if you have the most power. Yeah. But it's a tool. It's a tool of power aggregation and continuance. It's not. As we know with the Triffin dilemma, like it's also an obligation, and it comes with costs. Having the global reserve currency, you have to export dollars, and you have to buy everybody else's goods. So this is, being the global reserve currency since World War II is the main reason for the hollowing out of the manufacturing sector and the dissolution of the middle class in America. Like these are the consequences of the dollar being the global reserve currency.
Lots of interesting things to think about. So I want to touch on your reputation in the Bitcoin space for being the no BS guy. So you've built a reputation calling out bad incentives, bad actors, bad narratives, even when it's uncomfortable. What do you think, if you had to pick one or two moments, what do you think the most important moments were where speaking up actually mattered?
I mean, I'd say like the whole year of 2022 was probably the most important because I was kind of the definitely the person with the largest audience and, the most attention that called out Luna, so Do Kwon. So basically what happened is he was running a Ponzi scheme. It was not that complicated. It was kind of out there and obvious. And I went back and checked later, and there were, crypto people in my Telegram chats as early as Q4 of 21 referring to it as the Luna Ponzi, as Jump Capital out of Chicago and Galaxy out of New York made billions and billions of dollars on this thing. It really did have Ponzi dynamics. It was actually a classmate of mine from University of Chicago in my year as well, from my grad school, that ran, he was the global GM for Anchor Labs, which was part of the Ponzi. So basically what they set up was they offered 20% interest on UST deposited with Anchor Protocol. And this was an algorithmic stablecoin that was something you could trade for Luna back and forth. Mm-hmm. And it was pegged to Luna, which was their printed out of thin air shitcoin. Mm-hmm. And people were dumb enough to think that this was sustainable. And the truth was, as Luna would fall, there'd be like intense demand to buy UST instead. And like, there's nothing backing the UST. It's bullshit. All that was backing it was a printed out of thin air shitcoin. Mm-hmm. And then they were recruiting billions of dollars of deposits into UST to put in Anchor to pay 20% interest. So it was all bullshit. And shitty companies like Celsius were plowing their user funds into it without telling anybody. And, it was a horrible morass. Anyway, I tended even back then not to pay much attention to what was going on in various altcoins unless it started to show up in the Bitcoin space. And so in February or March of 22, Do Kwon made a big stink out of taking a bunch of the Luna Foundation treasury and plowing it into Bitcoin and saying that that was somehow going to be good for Bitcoiners. And even that I didn't really care about. But then he started showing up on Bitcoin podcasts, and you had like BTC Archive on Twitter, which is a 1 million follower handler, like pumping it really hard and saying it was good for Bitcoin. And you had notorious shitcoin pumper Anthony Pompliano, who does a lot of Bitcoin appearances, but often monetizes through crypto blockchain bullshit, pump and dumps and stuff. And so he had Do Kwon on his show and was like talking about how this was great that altcoins were adopting Bitcoin. And like, I just like the guy he spoke and talked like Elizabeth Holmes. Like you could just see the way he acted, like he was shifty and shady, and I just didn't trust him. And so I just took 45 minutes on a Friday evening after I put my kids to bed. I just started going deep on literally just Twitter and Telegram, just a little bit, and just found people that actually understood what was going on and just read up on it. And it was very clear that this actually was bullshit and it was a Ponzi. And I started calling it out. I remember it was March 24th and I said, Luna and UST are going to zero. And I started going at it really hard on podcasts and tweeting basically every day and just warning people and that they needed to get the hell out. And of course it did go to zero. I remember it was Friday, May 9th. It started collapsing and it was zero by Monday on May 12th. And then that led straight into Celsius because they did Mashinsky, who's in jail and should rot there. You remember in Big Short when they have that scene where they're like, why are they confessing? They're not confessing, they're bragging. Remember that?
Yeah.
About the subprime mortgages or whatever. So Mashinsky came out on, the 12th or the 13th and bragged on Twitter and YouTube that they were smart at Celsius because they had gotten out of Anchor with $500 million of user funds before it collapsed. And it's like, bro, I've been telling everyone this is a Ponzi for 6 weeks. And there were, smaller handles and folks in the crypto space that have been saying it for 2 months before me, since January. And you're supposed to be safer than banks, and you had $500 million of your users' money in a Ponzi? Like, you must be an idiot, and you're obviously in violation of all kinds of FTC rules because you're advertising, savings accounts and shit like that, and using the language of bank savings accounts while you're gambling with their funds. Like, fuck you. anyway, so he didn't like that because I was pretty public about it and said I thought they were, probably get your money out of Celsius because they suck and look at what they're doing with your money. And then he started like really aggressively trying to recruit deposits to Celsius, like paying big incentives to people to deposit there while blocking withdrawals and like slowing withdrawals down. So people were taking like 5 days, 7 days to get their coins out of Celsius. And so it was clear it wasn't a full deposit institution. It was clear that it was like fractional reserve and they didn't actually have your coins, which was not what they advertised. And it was obvious that that was going to go to zero. So I just let people know, like, get the hell out of Celsius. This thing is going to go to zero. And then it went bankrupt on June 12th. And that rolled straight into Sam Bankman-Fried and FTX and all of that. So in June and July, Jim Cramer and a bunch of others were just, I guess what does Gen Z say, glazing SBF. Such a disgusting thing. Anyway, they were just like, they were aggrandizing SBF and saying that he was like the JP Morgan of crypto. And basically what he was doing is he was trying to make bids for all these failed CeFi lenders. So he thought about buying Celsius for a minute. He had a bid in for BlockFi. He was talking about buying Voyager. And all of these companies that had just gone belly up were worth less than zero. They were negative equity. No one would ever buy anything offered by that brand again. And they all were in debt, in bankruptcy. So there was no reason to be buying them. So all I knew was he was full of shit. I didn't know why yet. I just sniff out when people are full of shit and I just fucking attack. When I spot bullshit, like I go at them and agitate until we find out what it is. Yeah. And we found out what it was with Do Kwon. We found out what it was with McKinsey. All I started doing, I just started tweeting, basically wherever I could and saying, don't trust Sam Bankman-Fried. SBF is a liar. And I knew for sure that was not going to be libelous because I knew he was lying. I just didn't know about what, but I was sure that if he ever sued me, then we'd go into discovery and I'd find out all the things he was lying about. One thing that I did know for sure that he lied about was the origin of Alameda. I knew for sure that he was not a successful trader because I was tracking that back in 18, 19, just friends in the street, whatever. And I knew that his whole story about the kimchi trade and making a bunch of profits arbitraging between like US and Asian markets was bullshit because that was something that only existed very briefly in like 15, 16 and got arbed away and it wasn't complicated. So there was no way to make a bunch of money in that. It didn't come out until the collapse of FTX and Alameda that was actually a Ponzi scheme back in 2019, that he was actually just recruiting new investors and using that to pay out the early people. So there was never a time when he was a good trader.
He's consistently running
Ponzi schemes. Yeah. Later we found out it's because he owed them lots of money. And if they went into bankruptcy and the estates started going after the money, he knew that he was insolvent. And that's why he was trying to buy them, because if he could buy them before the bankruptcy estates and lawyers got in there and saw how much money he owed them, then he could paper that over and just hide it. So then that became... I did start nicknaming him too. So I was calling Do Kwon, Don't Kwon, Alex Miskamsky, and I gave Sam the name Scambankster Fraud, which ended up making a lot of headlines. I think there was, New York Magazine used that one in a big bold headline. So that was fun. And then that culminated in November. So on November 1st of 22, somebody slipped Ian Allison, the editor at CoinDesk, the Alameda balance sheet. And he knew me from lots of articles all that year and sent it to me right away. And I remember I was actually outside of a hospital at UCLA. One of my Swan employees had a little mishap in the surf right before Pacific Bitcoin, our conference out in Santa Monica. So I was just outside the ER making sure he was okay. And Ian calls and sends it over. I'm like looking at this PDF on my phone of this balance sheet. And I'm like, so I analyze it and I explain like, this is bullshit. Yeah. Like he doesn't have any Bitcoin. Most of the balance sheet is FTT token, which is worth zero because it's their own thing, And that he wrote the article the next day that basically was the beginning of the end of SBF. Yeah. Crazy. So that was 2022. I I also don't like false narratives inside of Bitcoin. So, things like stock to flow models, predicting price. I've always called that out from the very beginning. I didn't pay much attention to it when it first came out in 2019, but by 2020, it was like, I just don't like spreading false information. I just am like allergic to it. And, I think that's a big part of why we serve the market that we do, because the mass market just buys based on attention. People that are putting a lot of money into Bitcoin, they want truth and they want signal and they want to be able to trust the people that they're working with. And so that just, I think is, for better or worse, I and my personality are a perfect match for the business model that we have in the market we serve. But I am not the right person just to play the attention game, because the right thing to do, if you just want to get people to buy and trade all the time and, have millions and millions of customers that are like somewhat interested, then you should be pumping every possible bullish narrative, and you should be scaring the shit out of them and getting them to sell all the time, and like trying to get them to do all kinds of like trading strategies and Telegram pump groups. And like, that's Coinbase. That's the attention-based economy. There's very little room left for the provision of signal. But what you can have, if you have a company built around the effort to find truth and spread it, is longevity. You're very hard to kill.
Which that's what you guys are doing with Swan, and leads me, I have some questions for you. I want to talk about the Swan products. I think they're very interesting. I personally find them interesting. I know our listeners and community will find them interesting too. So it might feel a little rudimentary.
Not at all. Not at all.
Especially coming off our deep dive into the the space, the last part of the conversation. So I want to dive into some of the Swan products. And you zoom out, what are you most excited about building at Swan right now? And why does it matter for somebody who isn't like a Bitcoin maximalist?
Yeah. I have to note, anytime somebody says that, you have to remember that a maximalist is an epithet created by a shitcoiner to slander Bitcoiners. So Vitalik Buterin tried to call Bitcoiners maximalists to, basically insinuate that they have blinders on and won't look at all his shiny shitcoins. So, it's something that people can adopt if they choose, but you should never let a shitcoiner call you a maximalist unless you want to be called a maximalist. I
kind of liked being called a maxi.
Maxi is just a diminutive of an epithet. It's even worse. So we're just talking about like the product array and like what we can do. What product are you so obviously brokerage, tax loss harvesting, limit orders. That's all kind of like the buying and selling of Bitcoin. I think retirement accounts are a big deal. So traditional IRAs and Roth IRAs, and just knowing that you can actually hold real Bitcoin in an IRA.
Not necessarily like through an ETF.
Right.
That's what when I'm, was researching and prepping for the show, that's what I got the most excited about. I just rolled over an old 401k from a company I used to work for into an IRA. And I have, the ETF, one of the ETFs through that. What if I wanted to move that to Swan?
Yeah, you can just do that. You can just, it's just like any other IRA rollover. So you just open up an IRA with Swan and initiate a rollover, and the custodians handle the transfer.
It's as easy between each other. It was to go from one to the other.
Yeah. It's probably easier because our customer service is way better than big companies. So we harass them until they send the money.
Is that agentic AI?
Yeah, probably. Yeah. So yeah, I think that. And then I think custody is a big deal. So we have Swan Safe, which is fully delegated custody. So that's in cold storage with BitGo, but through our interface. And so that's what I was talking about at the beginning, where you just have an account, but you can withdraw whenever you want, which is nice. And actually take self-custody. Swan Vault is multisig, so that's collaborative custody. So basically you have 2 keys and Swan holds 1 for you, and 2 out of 3 keys can sign a transaction, which means you can move the coins or spend the coins with 2 out of 3. What's nice there with 2 out of 3 is you can keep 1 on your desk and then 1, at the bank near your grandma's house in Nebraska, and you don't have to worry about that one because you can sign transactions with your key and the key that Swan is holding for you. But if Swan ever goes away, then you can take the trip and go get it out of the safe deposit box. Or if you want, if you lose your key that's on your desk, you can still sign with Swan's key and your backup key. So that's a really good way. And then we're building something called Swan Trinity, which is kind of like the Rolls-Royce of custody for families, family offices, whatever. So this is going to be 3 distributed keys, one at each of 3 institutions, so that nobody actually controls the Bitcoin except for you directing 2 institutions that you want to do a transaction. And you'll have to do a verified video call with 2 different institutions with your passphrase and, them verifying that it's definitely you and not AI.
Yeah.
There's ways to do that. And so that'll be basically like the most threat-proof way to custody your Bitcoin. It's wrench attack proof, it's fraud proof, it's hacker proof, it's phishing proof. As much as anything could be, it's the best. So that'll be out later this year. And as is often the case, a lot of the best products are built when you're building them for yourself. And that's what I want for my family.
I mean, I think that's one of the big questions that comes up all the time in, the Bitcoin space, the cold storage, cold wallet, is how secure is it really? There's, you see the headlines, I feel like every other day of a kidnapping related to something in the cryptocurrency space. So it's very interesting development, I think. And it goes back to kind of the ethos of Swan and building product to protect family and business on like a generational wealth landscape.
Yeah. Yeah. Look, we've got generational wealth just rolling off your tongue now. That's the whole point. It's good.
So can we explain what multisig means? Kind of like a 101?
Yeah. So this is what I was just talking about. Our version of multisig is Swan Vault. And again, it just means that when you want to initiate a transaction, that means moving the coins, same thing as spending the coins. As far as the Bitcoin protocol is concerned, you moving your coins to somewhere else that you own is the same as you moving it to me. It doesn't care whether that's spending or moving. So you're going to initiate a transaction. You need to sign that, and you can have a single sign transaction where it's just one signature is what moves it. And that's just the entering of a private key is what allows you to move those coins. You can also set up a multi-sig address and move your coins into that, where it requires 2 out of 3 signatures to be able to move the coins or spend the coins. You can even set it up, you can set up 4 out of 6 or 5 out of 7 or 9 out of 14, whatever. But most common and kind of what anybody would need is 2 out of 3. And so that's what we've done. Could I get another water, please? And so you can do that with a paper wallet, which is just your passkey written down on paper, or you could do it with signing devices, which is often called a hardware wallet as well. And so that's what we do is we use Blockstream Jades, 2 of those. And so that's what you will have, one on your desk and one in somewhere else undisclosed location.
I think, that's one of the the scarier things you think about for people who, they want to have Bitcoin long term, but this whole security aspect of it seems very complicated for somebody who's not familiar with all the products that are out there.
That's why I highly recommend just getting in, and then, it's not dissimilar from just wanting to own a lot of Bitcoin. It's like the more you know about Bitcoin, the more you want to own it, and you want to own more of it. And then the more Bitcoin that you own, the more your mind will be open to actually understanding different ways to custody the Bitcoin, right. And you'll figure out what's right for you and your family.
Or what series of ways are right. So maybe you want to have it stored in a couple of different ways.
Absolutely. Yeah. I mean, I'm not going to be overly prescriptive. I don't mind if people have some in an ETF, because what generally happens is once it becomes 0.5% or 1% of your liquid net worth, you end up going down the rabbit hole and having selective attention for Bitcoin education on YouTube and Twitter and LinkedIn or wherever. Pick up a Jason book, pick up a Cory article, like whatever, and usually end up preferring real Bitcoin over ETFs. And so I think they're a great top of funnel for Bitcoin, but that is what they are. They're an inferior product.
What common mistake do you see families make when it comes to inheritance and Bitcoin custody?
Well, we're early in the days of actually seeing much Bitcoin being passed because it's still so new. But I think there's just a lot of learning to be done, and it's not new territory. Setting up trusts and just thinking about tax protections and things like that. Like, this is well-worn territory. It's just that people are doing it with Bitcoin now. Like, if they were already wealthy, they're trying to fit Bitcoin into that paradigm. And there's a lot of people that accidentally, or just through choosing well, became wealthy through Bitcoin, and so they have to learn that kind of thing for the first time. But it's not that complicated. People have been doing it for a long time. It's one of those things like starting your first LLC. It just seems like, oh my gosh, like I'm actually the one that actually has to do this and own the business and pay fees and deal with the government. It was so much easier just being an employee. But once you get through it, it's like, it's not that big a deal. And then all of a sudden you have 12. Probably like spinning up your first agent. And it's like, oh yeah, got a bunch of those.
I have a whole bunch of these.
Get back to my swarm. So it's like that. I think, once you dive in and you kind of create that first trust and you get used to dealing with the lawyers and you get used to like, okay, yeah, this costs some money and yeah, that sucks, but there's a reason that I'm doing this.
And this whole suite of offerings, the trust, that's all happening through Swan Generations?
No, Swan Generations specifically is an actual product. So it's not a suite of services. It's actually just a product where you can do an irrevocable gift to a minor and set an ascendancy age when they actually take possession of the Bitcoin. So right now you can only set it between 18 and 25. But we're thinking of extending that up because some people don't want their kids to get the Bitcoin until they're 30 or something.
Or 50.
Maybe. Yeah. The forced hodl, as they say. But yeah, that is pretty cool. And then I think just in general, we're just, we work with multiple trust companies, and we have a lot of folks that we kind of recommend that are in our ecosystem. So we can put people with good RIAs that understand Bitcoin, good lawyers that understand Bitcoin, estate attorneys that understand Bitcoin. But again, or we can just provide resources to the ones that you already have, which is probably much more often the case. Is, we'll have a private client that wants to bring their accountant and their estate lawyer to a meeting, and we're happy to do that and be involved in the family planning, and just explaining like what we do and how they can work with us.
No, that makes a lot of sense. Can we talk about Swan and New York? Yeah,
sure. Look, it was the last state that we were able to get into. We got in last fall, and I think it's a big deal. It's been amazing from just a biz dev and a corp dev perspective to, that's it's the biggest metropolitan economy in the world. It's number one. And it's still the capital of capital, despite what Abu Dhabi might claim. That's not true. And so, yeah, it's been awesome. So all my banker buddies from back in the day can have Swan accounts now, and all the new, talk to all these Wall Street analysts, and they can just quickly sign up for a Swan account and experience it for themselves. And, we can do fun events. And, we just did an event at NASDAQ last month, which was awesome, right next to had the big event space right across from the ball drop on like 43rd Street. So yeah, it's fun. It's good. I spent 7 years in New York, and a lot of my personal network is there because I was in my 20s in New York when you have time to meet everybody. So, it's a lot of my tightest friends are from those days. In fact, 2 of my board members are from my New York days. Yeah.
So what did Swan have to build because of New York and New York kind of regulations? And
it actually just came down to one of our settlement and custodian providers getting a DFS license, which was Department of Financial Services. And so, yeah, we work with BitGo and Bakkt for kind of retail, and they were both working on it, and Bakkt got it. So yeah, we built it on top of that. Yeah, so we're not actually in the flow of funds. That's something that people should understand. Yeah. Like we're an integrator or a fintech, so we don't have to have the licenses.
And that's why you're partnering with the BitGo.
That's why we partner. So it's equity trust for retirement accounts. It's BitGo for cold storage custody, Bakkt for a lot of brokerage and settlement, BitGo for some of that. Basically just depends on the use case, like who we're using. And there's a bunch of other providers integrated with us as well. So
it wasn't actually you guys having to do the regulatory.
We were waiting for one of our
them to get.
We were waiting for one of our custodian settlement partners to be able to get that.
Be able to get it.
Yep. And then we do a lot of other complicated stuff that involves securities and transfers and things like that. So we have a joint venture where we own part of an RIA called Orange Horizon, which makes noise every once in a while when they open a new office because they're super orange pilled. And I think they just opened a Rockford, Illinois.
Rockford, Illinois?
Yeah. It was on the national news actually because there's like this random Bitcoin centric RIA. All the wealth advisors are like Bitcoin nuts, but they'll also sell you a stock if you absolutely insist.
That's funny. Do you think regulation is a moat for Bitcoin only companies or tax on innovation?
I mean, there hasn't been much, I guess. The biggest headwind for Bitcoin has just been that, so many of the infrastructure providers also do crypto.
Yeah.
And so then they get stung every once in a while when the grift and the crime on the crypto side is like so big that there's a backlash.
Right.
Which is inevitable. I mean, of course, banks were going to not want to bank crypto after they did all the crime in 2021, 22. Then it can affect Bitcoin services as well and make things hard. So, that's probably the only thing. But otherwise, I think there's not been anything negative for Bitcoin really ever. It's only been more and more positive regulatory developments over time, from being recognized as a commodity by the CFTC in 2014 and digital property by the IRS around the same time. Like that's the clarity that you needed for the last 12 years. And then the only thing in the future that will, I think, make a big difference is probably just getting rid of cap gains tax on Bitcoin transactions. Yeah. But I just don't see them doing that anytime soon. There's just going to be, maybe they'll do something for like de minimis, $600 or less, something like that. But that would be just a tacit admission that it's a competing currency for the dollar. Mm-hmm. And, the dollar industrial complex is unlikely to let that one through. And they'll probably leverage the gold bugs and the gold community against that. Yeah. And they'll leverage all the crypto guys against it because the crypto guys will say, hey, if you're doing it for Bitcoin, you got to do it for all the shit coins too. Right. And then they'll ruin it like they usually do.
Yeah.
So I think it's going to be a long time before you see tax-free Bitcoin spending, unfortunately.
I think so. One of the interesting things I learned last year and trying to set up a mining operation was that Bitcoin is taxed as ordinary income when it's mined, and not the same way that a natural resource like gold or silver is taxed upon sale. And that was a big, I think, me personally, I think that will change in the future. But that was like a very big challenge when you look at the mining space.
Yeah, absolutely. It is.
All right. So I want to go to our final part of the show.
All right.
So we always end with a lightning round, this or that, gut instincts, dollar cost averaging, or lump sum.
TCA.
Self-custody or trusted custody?
Self-custody.
Spot Bitcoin or Bitcoin ETF?
Spot.
Long-term horizon?
Real Bitcoin. Real Bitcoin.
Long-term horizon or quick wins?
Long-term thinking.
Privacy or convenience?
Privacy for sure.
Learn first or buy a little now?
Buy a little. It makes you learn.
Cory, this was exactly the kind of clean, empowering Bitcoin conversation we want on Stacked, beginner friendly, but not watered down. Thank you for helping our listeners feel more confident, more protected, and more powerful with their money. If everyone wants to follow you and Swan, what is the best way for them to do that?
Cory Swan on Twitter. And I do like to post a lot. And then we have, by far the biggest YouTube channel in the Bitcoin space, which is Swan Bitcoin on YouTube. So one of those is probably a good place to spot me.
All right. Thank you, Cory.
Yeah, thank you.
That's a wrap on this episode of Stacked. If this one added value, share it with someone who's ready to level up their financial life. Subscribe so you never miss an episode. And if you're feeling generous, leave a rating and review. It helps us keep the show going and reach more people who are serious about becoming their own best asset. You can subscribe to our newsletter at www.stackedassets.co for weekly intel on Bitcoin markets, business, and living well. Follow along on socials at Stacked Assets or my personal at Emily Dempsey for more on Bitcoin business and building the life you actually want. I'll see you next week. Stay stacked.